And good morning and welcome to the VSA Capital 5-Minute Morning Miner. And for anybody listening and you're wondering why there's always a 3-second pause, because a few people have asked me, it's just because of the way Teams works. And that's the way it is. And this isn't the most refined of podcasts, but it is live and up to speed, and you're hearing it exactly as it is. Paul is on holiday today. He's eating up all his holiday days. But we've got Ollie. Ollie, how are you?
Yep, very well, thanks. How are you doing, Andrew? Enjoy the rugby?
Oh, God, actually, you know what? I found it a bit boring. When you're playing Italy, you want to win by about 50 points. And why does he have to keep taking good players like Marcus Smith off? It drives me insane. But there you go. Yeah, it wasn't it was raining, wasn't it? What else could you do? I played tennis in the morning, watched rugby in the afternoon, almost a perfect Sunday, really. But there we go. Now, look, before you get stuck into results, I thought it might be worth mentioning, Ollie, that the vanadium price has bumped over $10, which it's peaking up quite sharply, which probably partially because I think vanadium production at the moment has been stopped in China for the Olympics. But obviously that would mean that, Bushveld, which obviously has production at the moment, should be perhaps ticking up. Largo on the TSX maybe ticking up. And our favourite ferroalloys should be having a move down at 27p. It's far too cheap, to be honest with you, with Sir Mick Davis obviously in there with Vision Blue Resources. Don't know if you've got a comment on that, or we'll just leave it there.
Well, I think it's a spread widening between China and Europe. As you say, there's sort of heightened disruption because of the Olympics. So what supply is available in Europe is becoming more expensive relative to China. So it's still around $9 in China, but yeah, it's over 10 in Europe. And often these sort of short-term premium do erode, but given everyone is sort of struggling in every commodity for inventories and to keep supply chains moving, that may not come down too quickly. I don't think you're going to necessarily see a huge run up in the price, but obviously an extra dollar or so per pound really does help with the margins for these vanadium producers.
I think that's the key. I agree with you. I don't see it running that much further, but I mean, at this level, they should all be highly profitable. I noticed in the FT today, actually, there's an article about how there is a complete shortage of commodities, particularly those traded on the London Metal Exchange, the LME. We are at the moment in a super bull market cycle for mining. It's because for 10 years, no money has been invested in the industry. And now it's catch-up time, and you're going to see commodity prices very strong, and you're going to see commodity equities starting to really perform. That's my view, anyway. Anyway, to news, Ollie.
Well, not too different a theme. I think the most interesting announcement out this morning is the dual listing of Neometals onto AIM. It's an ASX company, and it's exciting because I think it brings a genuine battery company to the UK, which has had a long track record of success in Australia and on the ASX. They're probably the first company to, have a real success story in producing spodumene in the last lithium cycle. They sold out of their Mount Marion project in Australia, spodumene hard rock, and returned a lot of money to shareholders. After the sale and the pullback in the lithium cycle, shares dropped down to about 14 cents, and they're now $1.32, and they've got quite a wide range of interesting battery related businesses, and the way they like to operate is through JVs. They've got lithium recycling, vanadium recycling in Scandinavia, mineral sands project, and other lithium related businesses. But it's a management team that really does understand the whole ecosystem, and I think that will be really good for educating London investors, where we haven't probably had as much success as ASX or TSX in this space.
We must get them in, Ollie. We haven't. Have you met with them?
Not for a while. Paul knows Chris Reed quite well.
Oh, it's Chris Reed, isn't it? Yeah. Yeah, I think we ought to probably get them in. Anything else this morning?
Well, sprinkling of gold RNS's project updates from Shanta, Kefi. Unsurprising given the move in the gold and silver prices over the weekend, which jumped up strongly to sort of 1860 and over 23, which is on the back of Ukraine and geopolitics, which is quite a tough thing to trade as an individual investor. But I think the exciting thing is how quickly the junior space moved on the back of the gold move, and that suggests that investors are primed, to when the gold price starts moving, that the whole sector is really going to blow.
I see Caracol Gold raised a couple of million through Clear Capital, didn't they, this morning?
Yes, yeah, at 1.1p, so that's pretty good price compared to where it's been trading recently, and that will help with the growth program that they've set out over the last few months.
Yeah, corporate client of ours, or the Clear Capital, that particular fundraise, but they're going for it at the moment. They're very, very active, so definitely one to keep an eye on. Anything else, Ollie?
I think that's about it for today. And we'll be back all week, because I think Paul is not back till Thursday.
All right, we'll be at it all the time, and obviously you're not single, but you have a steady girlfriend. But any Valentine's card this morning, Ollie?
Just one.
And I think we can guess who it's from. On that note, save you your blushes. Thank you very much. We'll speak again tomorrow, Ollie.
Cheers, Andrew.